Hi guys, Max here, and this is of course your most recent market update. How did things go yesterday? Well, not brilliantly. As you can see, it was red for the most part. Actually, 11 out of the 12 major sectors of the S&P 500 fell for the day, so really stocks didn't do quite well at all. Big tech was mostly okay, Amazon performing the worst with minus 1.5%, but then smaller tech companies, well, they did quite a fair bit worse. AMD was down by about 3%, for example. In general, there's just a lot of uncertainty regarding everything right now, and investors are very uneasy. Most industries fell, as I said. Industrials were down, utilities were down, real estate was down, energy was up. Of course it was, because it's energy, and oil prices were rising once more again. The S&P 500 on the whole then fell by about 1.1%. The Nasdaq index fell by about 0.8%, and the Dow Jones fell by about 0.8% as well. As for the rest of the world, it was really rather a similar situation, except for China, which saw some really major gains. As you can see, the rest of the Americas, Canada, Central and South America as well were falling. Europe was falling too. China performed really, really well. Alibaba was up, basically on this vague idea that actually the government, the CCP, isn't going to be cracking down on tech companies anymore. We've had this kind of action before. It always ends up being wrong. The Communist Party is always the Communist Party. All they care about is control over their country. They will not prioritize economic growth. They will not prioritize capital markets. So in the long run, actually, these tech companies are still incredibly risky, despite what some pundits will tell you. On the whole then, the MSCI World Index fell by about 0.6%. Now, in the world of currencies, it was much of the same stuff that we've been hearing day after day recently. The dollar spot index rose slightly by about 0.3%. The euro is currently sitting at about $1.07 each, and the pound at about $1.25 each. Now, actually, the yen has been consistently falling. I know we don't normally talk about it, but it's just falling to a new low of about 134 yen per dollar, which is down from about 115 yen per dollar that we saw back in the beginning of 2022. The Turkish lira is seeing the exact same sort of thing. It's currently sitting at 17 per dollar, when back in November, before their inflation collapse really started and kicked off, well, it was 10 lira per dollar. Now, what this really does is it just emphasizes the fact that actually the dollar isn't necessarily a strong currency right now, as a lot of people are saying. It's just that all the alternative currencies which we measure the dollar against are so damn weak. As for the fixed income asset market, well, the 10-year Treasury yield of the US, of course, rose by about 6 basis points and is now back up above 3%. It's pretty much sitting where it has been over recent weeks. The German 10-year yield rose by 6 basis points too, and the British 10-year yield rose by 3 basis points. So again, just slight outflows from the fixed income asset market. Nothing major yet. We really haven't kicked off into full speed quantitative tightening yet. That will really take hold about midway through this month, and then it will get to its fastest point of acceleration come September of this year. Now, as I mentioned earlier, oil prices rose once more. WTI crude oil rose by 2.7% yesterday alone. It's now sitting at $122 a barrel. Brent crude oil is sitting at $124 a barrel. Both of those are very bad news. Pretty much every single piece of bullish action that we've seen in equity markets over recent months have basically been based on the idea that maybe inflation has peaked, and now we're seeing oil prices continue to rise and spiral out of control. Again, as I mentioned earlier in the week, this price rise is due to real buying and selling pressure from actual demand and supply from oil, not from speculators like we saw when the actual Ukrainian invasion started. The result of this is that actually oil prices are going to remain very high and probably continue to rise as well. This is awful for inflation. It will not be reflected in this month's set of CPI data, which comes out this Friday. This will take 1, 2, or maybe even 3 months to really see its full effect, which is one of the reasons that I'm not confident that actually the inflation scare is over. Finally then, for traditional financial markets, gold is sitting at about $1,855 an ounce, so no real major changes there. What happened in the crypto market then? Well, it was actually quite a strong day. As you can see, most crypto coins rose. Bitcoin is maintaining its place above $30,000. Ethereum is maintaining its spot above $1,800. Most altcoins rose somewhere in the region of 1 to 3%. Really nothing major there, just some slow, consistent gains. Now, is there any specific news for this? Well, the Ethereum proof of stake test merge has started and seems to be going well. So that may be slightly bullish for the crypto market and for Ethereum in particular. We also got some news that in New York, well, stablecoins are going to be required to have certain regulations to actually be legitimate. They're going to have to be fully backed one-to-one with cash equivalents and also protected from basically fraud from the company going out and just taking your money and doing what they want with it. This is good for the crypto market in general, I think, especially after the UST collapse that we had last month. And so this might be slightly bullish for the market, and that might be helping asset prices slightly. Now, why did stocks fall then? Well, as I said earlier, it's mostly because the oil price rises have again flared up inflation fears. Really, those fears should have never disappeared in the first place, but suddenly investors are thinking about them all again. This pretty much gets close to wiping out the gains that we've had over recent days. We also got some news from a couple specific companies. Intel, for example, have announced that this quarter isn't going as well as they had hoped. And so there's this growing fear of just bad corporate earnings reports in general that will stem from inflation. We've already seen it with a bunch of companies, the worst one being Target. And so investors are worried about this spreading and about other companies taking these hits as well. Finally, it is worth noting that really all of the gains we've seen over recent weeks have sort of been on borrowed time. They've been based on sentiment and feeling and just how people think the markets are going to move, as opposed to actual empirical data. When we get to Friday, when we get the new US CPI data, we'll actually have something concrete to go off. If it's a really bad report, then expect all of the gains we've recently had to disappear. If it's a really good report, then expect them to maybe maintain. Now, as for what's coming out today, well, we have the European Central Bank's final decision that will actually come out today. Again, we aren't expecting them to actually hike interest rates this month, but maybe prepare us for an interest rate hike next month. And then they're also supposed to be lining out their plan to stop quantitative easing. They are still making net asset purchases every month, which is absolutely insane. The European Central Bank is actually worse than the Federal Reserve, in my opinion, for just how irresponsible they are these days. Now, on the topic of central banks, well, we got some news from Australia yesterday, whose Reserve Central Bank announced a 50 basis point rate hike, which was actually far higher than most people were expecting. Most people thought maybe a 25 basis point hike was in store, as inflation is high in Australia at about 5.1%, but really compared to Europe and North America, that's not too bad at all. This is, though, quite responsible, and if you're Australian and watching this video, well, you should be glad that your central bank is acting in due time. Now, as for some individual pieces of news, we have quite a big one coming out of the UK. Of course, Boris Johnson was almost ousted from power earlier in the week, but he actually managed to cling on, and he's now trying to move forward past that point, and he's doing so with a big housing reform speech that's coming out today, where he's supposedly going to lay out a plan to help a lot of people buy their homes that they want, for first-time buyers, people who don't own property to finally get on the property ladder, and a bunch of things like that. Now, what's actually going to be in this speech? Well, we don't know for sure or absolute with total certainty, but in reality, the way British politics works and has worked for the last couple of years, but it is utterly disgraceful, is the government will leak all of the information about this speech ahead of time, and then they will gauge the public's reaction based on media bias and things like that, and then they'll change what they're actually going to say. So we're not 100% sure about what's going to come out, but we've seen certain things leaked. Now, there are a couple main things that we are expecting to hear from him. The first is that actually the government's right to buy policy is going to be extended. Now, for people who don't know, this is basically for people who live in state subsidized housing. They're given the option or the right to buy their home off of the council, usually at a heavily discounted rate. This was done massively in the late 20th century under Margaret Thatcher. It was very popular for a lot of people because it turned people who were reliant on the state into home owners. And what we found actually, that there were a lot of benefits from that. Many people found themselves caring about their community more, investing into their own property because suddenly they owned it. They weren't just renting from a local authority. Johnson's also come out with this idea to allow people to use their benefits, which is basically what we call welfare. If you think of welfare checks, if you're on unemployment, that's basically what we call benefits. Well, you'll be able to use those payments to buy a house as well. We're not 100% sure how this will work. If maybe there will be assistance in helping people on benefits save a deposit for a home, or if maybe they'll be able to use this benefit income as income on a mortgage application. We're not 100% sure, but basically Boris Johnson wants more people in the UK to buy their homes. Then finally, he's also going to be announcing some plans to hopefully ease the cost of living crisis, to ease inflation, to make it all a little bit lighter on people. Now, the reality is that some of this news does sound really good. In general, I do support the right to buy policy as long as we're still building enough homes, but that really gets to the crux of the issue with the housing market here in the UK and really in almost every other country where there's a housing market crisis. The problem is too little supply. It's too strict housing regulations that doesn't allow the market to take hold and just build the amount of homes that we need. Now, Johnson actually did try to address this back in 2019 when he was newly elected, but in short, he was unable to get anything through Parliament because his own party didn't support his reforms. We have a massive population of NIMBYs in the UK, people who don't want any kind of development anywhere near where they live, anywhere near our green spaces, and they're happy to see housing prices rise anyway. Now, after this reform that failed to get through anywhere, well, we then had COVID, which kind of consumed everyone, and so we just all forgot about it. But actually, that's the crux of the issue. If Boris Johnson really wants to help solve the housing crisis here, and if other governments want to do the same, all they have to do is relax planning regulations and allow capitalism to take hold and for entrepreneurs to build more homes. But of course, our government's stupid and they won't do that. Now, it's also worth talking just very slightly about why the Tories, the Conservative Party, is so sure that they want people to own their homes. And it's for the exact same reason that the Labour Party love to have people on benefits. It's because homeowners are more likely to vote Conservative, just like people on benefits are more likely to vote Labour. As a result, it's been a massive aim of Tory governments of right now and in the past, for decades back if you go, to try and maximise home ownership because it just makes them more likely to be re-elected. Now, we also got some very minor news from the OECD, which says that the UK is going to stagnate over the next 3 years. To be perfectly honest, I don't put any faith in these predictions. If you look back at their predictions in the past, they are always more wrong than they are right, as in they are actually really poorly wrong. When it comes to economists who aren't actually involved in the markets, they tend to be pretty poor at their jobs. And if they were good at their jobs, well, then they would be making millions and millions of dollars working in New York or London or Paris running funds. If they were accurate, they'd be able to make huge amounts of money off of their predictions, but they never quite tend to be. Now, another thing that's quite relevant regarding finance in the world right now, and in particular commodity prices and the huge commodity price inflation that we've seen recently, is this crisis in the Black Sea regarding exports from Ukraine and the war between Russia and Ukraine, which is basically stopping these exports from taking place. Now, there has been a slight development here. Basically, Russia and Turkey are trying to work out a deal to allow Ukraine to export stuff again. It isn't really clear where this is going to go at this point. Ukraine isn't included in the talks, which is not a great place to start. And Russia also isn't a government that operates in good faith. Let's not forget how untruthful they've been in the past. They said they would never invade Ukraine. We know where we are now. So it's going to be very difficult for Ukraine to accept any kind of resolution from Russia regarding this. But the idea is we want to get wheat exported from Ukraine again to try and ease price inflation. Will this happen? Frankly, I don't think so. I do have a long video on this coming out later today, so check out that when it does come out if you're interested in that. We also have more chaos in China. If you remember, over recent months, China has re-entered mass lockdowns across the entire country, trying to target this zero COVID policy. And unfortunately, they haven't learned their lesson because they're still trying to target a zero COVID policy, which we all know just isn't feasibly possible in this day and age. The vaccines are not effective enough to stop transmission, no matter how many of them you have, which basically means that COVID is here. It's endemic. It's here to stay. You cannot get rid of it. You can only control it to certain extents, and people just need to learn to get on with their lives. A COVID zero policy is just absolutely insane because there is absolutely no exit plan. There is no end game. You just condemn yourself to maintaining lockdowns and authoritarianism forever and ever. But as we mentioned earlier, the Communist Party of China loves authoritarianism, so they are not too unhappy with this at all. As a result of this, we're seeing lockdowns come back into play in Shanghai, which only really opened up about a few weeks ago. This is not good news at all. A region of Shanghai that has 2 million people, well, the people who live there, they've started receiving text messages telling them to stock up on food from the government because they're about to be put in lockdown again. This is, of course, going to exacerbate the supply side crisis that we already have and that has been getting worse, not better. The factories that operate in this area, maybe the Tesla factory as well. I'm not 100% sure on that, but we do know it's around this area. Maybe that will be impacted by this too. In general, this is bad for inflation. It's bad for the world economy, and it's not going to get better anytime soon. Finally, we have some news regarding Palantir, which I know is a very popular company here on YouTube, even though it has been performing rather poorly recently. To be honest, that's mostly due to the macro environment as opposed to the company's performance in and of itself. Now, who is Palantir? Well, they're a consulting or tech company, depending on who you ask. But in general, they aim for really big contracts from major government institutions. Think the CIA or the NSA for creating software or for analyzing data. Now, for the most part, they are an American company and almost all of their revenue comes from America. But more recently, they've been trying to branch out overseas, and the NHS, the National Health Service here in the UK, which is our socialized healthcare system, it's sort of one of the biggest employers in the world. It's a massive organization. And so Palantir has decided to target this major contract with the NHS. Now, it's worth about $450 million, which is obviously a huge amount in revenue. That's a significant portion of what Palantir currently makes per year. And it's basically just to create this new data analyzing tool for the organization. Now, this is, of course, going to be covered in controversy because it is filled with the stuff that makes deep state conspiracy theorists really, really happy. This company that works with the CIA and spies on Americans and on other Western nations and its citizens as well, they're now going to be working with one of the largest health services in the world. That's really nightmare stuff for a lot of people. Personally, I'm not really too worried about this. I think in the UK in particular, British people have this weird idea of NHS exceptionalism where we've somehow convinced ourselves that it's the best health service in the world. The simple truth is it isn't. If you look at the data, the empirical facts, there are a bunch of different systems, most of them in Europe, which actually have far better outcomes in a lot of cases. The NHS is not infallible. And if Palantir can provide a valid service to aid this organization and the organization deems that that is worth the money they're willing to pay, then this is good news. This is capitalism and capital markets at work. Either way, though, it's definitely good news for Palantir. They are moving international more and more every year. They are expanding their revenue sources. They're diversifying their contracts as well. This is good news for a growing company that has a cult following here on YouTube, so I thought I'd mention it. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.